Okay, we are now on the episode 5 of our video lecture series for not-for-profit accounting. So again, here are the topics and the subtopics. Now we are already finished with this one and this one, right? So actually, we are now on the accounting for donations and we are already through with the cash donations. However, I have left you a problem and I promise that I will answer that in this episode so that we can proceed to another topic. But before we start, I'm Gletsmar B. Kasama and welcome to my channel. And if you are new to this channel, please click like, subscribe, and hit the notification bell and select all to be updated on my next videos. The assignment goes like this. So Mr. Baby donated 2 million to Bantay Baby Foundation with the condition that it should be deposited in an investment house permanently. So with emphasis to permanently. And only the investment income can be used for acquiring research equipment and maintenance of such equipment. So during the year, the investment earned 12% income. So the NPO used 70% of the income to purchase research equipment and 10% of the income was spent for its maintenance. So the requirements are again the journal entries for the transactions and the effects in the accounting equation for not-for-profit organizations. Let's go direct to the point. When Bantay Baby Foundation received the donation, the debit is cash of course, but the credit should be contributions revenue restricted 2 million. Because again, the said donation is permanently restricted by the donor as I have emphasized a while ago and as you can see here in this problem. Now, if we plot it in this table, that's an increase in assets and increase also in the net assets restricted. So no need to explain further. Now, to the tricky part. It was stated that the 2 million donation, since it was invested, earned 12%, which is, if we convert it to amount of money, that's 2 million times 12% equals 240,000. And since there is no mention about the income being a receivable, then we debit cash 240,000. Again, that's 2 million times 12%. And then credit contributions revenue restricted for 240,000. I know you're wondering why it was credited to contributions revenue restricted, right? So that's because, as stated in the given problem, the income can only be used for acquiring and the maintenance of research equipment. So it is basically temporarily restricted as to purpose. So that's the reason. Okay? Now, let's go to the usage of such funds. I forgot. But before that, let's post this entry first to this table. So that's an increase in assets and also an increase in the restricted funds. Now, let's talk about the usage. As I have told you, we need two sets of entries for usage. But let's focus first on the first set. The first one is an entry related to the release of funds from restriction, which is debit net assets restricted and then credit net assets unrestricted. The question is, how much? So according to here, the Bantay Baby only used 70% for research equipment acquisition and 10% for its maintenance. So all in all, only 80% of this 240,000 was used by the NPO. So only 80% also of the income here should also be released from restriction. And that is in amount 192,000. And what is again the entry for the release from restricted fund? Debit, net assets restricted, 192,000, and then credit, net assets unrestricted, 192,000. So, before I forget, let's post this entry here. So, we are to decrease this one, the net assets restricted, by 192,000, but we also need to increase the unrestricted fund by the same amount, 192,000. So, the equation will still be balanced. So, the second set of entries, and the last set of entries actually, is directly related to the usage of funds. So Bantay Baby Foundation used 192,000. So it's obvious that we need to credit cash by 192,000. But we have two debits. The first one is the maintenance expense, which is 10% of the earned income. So we have 240,000 times 10%, we have 24,000. And the 70%, which is 240,000 times 70%, that's equals 168,000, will be capitalized as research equipment. So that's the entry. So we have to post this entry. So decrease the net assets unrestricted by this 24,000, because again and again, I'll always remind you that expenses can only be deducted against unrestricted fund or unrestricted net assets. Next is we have to post this equipment 168,000 to assets. And lastly, we need to decrease the same item, the assets, for this credit cash of 192,000. And that's it. So now let's summarize these postings to get the net changes because of the transactions mentioned in the assigned problem. So if we summarize this, the total net change in assets is 2,216,000. In liabilities, we have 0. And in the net assets unrestricted, we have 168,000. And the restricted net assets is 2,048,000. All are net increases. So that's it for the assignment. Now let's go back here. So as of now, we can confidently say that we have finished this, the accounting for cash donations. So we can put a check mark on this one. And I know that what is supposed to be next should be the accounting for unconditional and conditional pledges. But it would take a very long time. So in order to make this video short, let's start with the accounting for non-cash donations. So we have a sample here, and it goes like this. So Mr. Baby donated medical supplies to Baby M Hospital, a not-for-profit organization, and those medical supplies is worth 2 million. So what will be your entry in cases like this one? Of course, it's debit the non-cash asset or assets received by the not-for-profit organization, and then credit contributions revenue unrestricted. So again, unrestricted. So with emphasis to that one. Why? Because non-cash assets donated are generally readily available for use. And if it is available for use immediately, then it should be recorded in the unrestricted fund. So if we plot it right here, we will increase the assets and then increase also the net assets unrestricted. So that's it guys for this video. So if you learned, please click like, subscribe, and hit the notification bell and select all to be updated on my next uploads. So what do you think of this video lecture? You can also let me know in the comment section below. See you on the next episode.